This is part of my don't fuck this up thesis. If you want to get involved, like, it's life-changing. It's the biggest macro trend we've ever been given. It's the best performing asset in all recorded history in the shortest period of time. And it continues to be the gift that keeps on giving. Everyone writes it off every time it does a down 80%, and 18 months later it's back at all-time highs, making everybody look like idiots. So the game is not to fuck that up. And the classic way of doing it is using leverage. Here is an asset class that goes up stupid amounts. And for some reason, that little voice in your head says, you know what? If I just got 5 or 10 times levered, I could make 10 times as much. What, are you bananas? It goes up 100, 200, 300% in a year. You don't need leverage.
On Tuesday, shortly after 10 a.m. Eastern Time, Bitcoin, the world's leading cryptocurrency by market cap, surged sharply to $9,350, marking a new all-time high record. However, this spike was short-lived as prices quickly retreated, dropping to around $62,185 by 4 p.m., according to multiple reports on social media. A Bitcoin whale was identified as partially responsible for the price dip, having sold about 1,000 Satoshi-era Bitcoins when prices peaked. Allegedly acquired for less than 50 cents each in 2010, these coins fetched over $63 million when sold on Tuesday. Additionally, as Bitcoin reached a fresh all-time high before plummeting to as low as $59,750, millions of dollars worth of liquidated positions, mostly longs or bullish bets, were reported. In a recent video on the Real Vision YouTube channel, renowned macro analyst and former Goldman Sachs executive Raoul discussed the dip and the massive $1.1 billion in liquidations caused by leveraged investors. According to Powell, navigating these market fluctuations is crucial to seizing the significant opportunities ahead for cryptocurrency investors in 2024 and beyond. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
You've got to think of crypto as the most ludicrous market you've ever been involved in. It has the highest returns, the highest volatility, the biggest drawdowns, the best memes, the most stupidity, the most angry people who hate you because you're involved. It's like everything in the world turned up to 11. So it's the most befitting thing in the world where everyone gets super excited about new all-time high in Bitcoin. It prints the new all-time high, does a massive reversal, and everyone's like, oh, we're poor again now, you know. And it's kind of like the other thing about crypto, unlike traditional markets, it's so easy for regular people to have leverage. So for some reason, even though you warn people and tell people and beg people not to take leverage in a 70 vol asset, they still do it. And so what happens is, it might even be just a small position, but it builds up because they all get confidence. Then something happens, and it's like, you get liquidated, you all get liquidated. We cleared out, I don't know, it was $1.5 billion of liquidations in Bitcoin in like half an hour. Market resets, and off we go again. So it's kind of, you have to think of it as a computer game. It's so ridiculous. But you know, as you know, I don't trade any of this stuff. I mean, I was buying all of my crypto back in November, December 2022. I don't think I've bought anything since January 2023, and I've just done a few asset allocation shifts. You know, the idea is just to own your spot, own it for the cycle, and just do nothing. And it's really as simple as that. You get paid to do nothing. I mean, most of this stuff, Solana was up 10x last year. Bitcoin was up 160%. Everything's up 50% this year to date. You don't have to do anything. You don't have to do anything at all. How you got to think about it is, we're getting to price discovery phase in Bitcoin, and most of the other crypto will catch up, and we'll all get to new all-time highs in the quality assets. You know, the shitty stuff won't do, but the quality assets will go to all-time highs. You don't know how high they go. Usually it's somewhere between 3 and 10 times the previous all-time high. Okay, so even when you're at the all-time high, you've got significant upside from here. You know, if we're not at the business cycle point where things turn lower, which tends to be later on, later in 2025, Maybe if it comes early, it's the end of 2024. Either way, that's when you get larger drawdowns. So you're going to see 35% liquidations, but you've probably got a worst case 100% rally from here, and the best case whatever, depending which asset you choose. So the risk reward is always good. So if you are on the sidelines, look, for most people, you hold less of an asset that's so volatile. So you own less of it. And days like today, when there's liquidation, that's a great day to put some money at work. Now, is this the low today? Who the hell knows? Could it go low for the next week? I don't know. But if it does, you should think of it as a gift. For me, it's not a gift because I have no more money to put into crypto. So I just have to watch it. But that's what these are for. So you should not be scared of them. If you have a thesis and you understand and you think, okay, this market's going to go higher over time, then use sell-offs to your advantage to get slightly better entries where, it's less frothy, because it never feels good to buy something and then it goes in your face 10, 15, 20% before rallying. It's always that always leaves a bad taste in your mouth. It's always nice if you can buy something that's on sale for no real reason except people are liquidating positions because they got overexcited. That's a nice time to stop adding to it and stop FOMOing, because today was a classic FOMO day, right? Most people would like, it's broken all-time highs. Don't do that in crypto. It will make you look stupid. And just have a plan, stick with it. Don't use leverage. Use the right time horizon. Unless you know how to trade really well, like Tony, don't touch it in that time horizon. Just buy and hold it and forget about it.
In one of his latest posts on X, Powell underscores the significance of patience, strategic planning, and avoiding impulsive decisions to fully capitalize on the bull market's potential. Following a price decline, Powell's post reflects on the enduring half-truths surrounding crypto's monumental macro trend and its status as the top-performing asset class in history, yet many fail to grasp that drawdowns create extraordinary opportunities. He advocates for a buy-and-hold strategy over longer time frames, leveraging the cyclical nature of bear markets to compound returns. Powell highlights the unconventional risk-reward dynamics of crypto, noting its remarkable upside potential compared to traditional assets correlated with central bank policies. Rejecting the notion of diversification in this new financial landscape, Powell points out the folly of comparing crypto to historical bubbles, emphasizing the unique and reflexive nature of this asset class. Despite acknowledging the volatility inherent in crypto, Powell urges followers not to miss out on its transformative potential. Shifting gears, Tether co-founder William Quigley recently outlined reasons supporting his bullish outlook, suggesting that Bitcoin could soar to $300,000 before the end of the current bull market. Clips from Quigley's recent interview with CNBC underscore these optimistic projections.
If you look at where we are pre-halvening, that's going to happen in April, where Bitcoin's reward for miners drops by half. If we look at where we are versus the last one, I'd say, which happened 4 years ago, we're in better shape. Obviously we didn't have the ETFs back then. If you look at things like derivative volume, it was nascent 4 years ago, now very high. We've just hit a record. And the ETF flows have actually surprised me. I was a little skeptical that they would take off quickly. And now we have close to, I want to say $50 billion. It's about 740,000 Bitcoin held in these ETFs. Daily, we're getting between 150 million up to $500 million flowing in. So there's a lot of positive forces that are pushing Bitcoin up right now. And this is before the halvening, which is usually after that fact when Bitcoin really skyrockets. Anything from like pre-2020, there was very little institutional interest in Bitcoin. It was a retail-driven, globally retail-driven phenomenon. And now I would say there is a lot of institutional money that tracks it. It's also why you see such interest in derivatives. The volatility in Bitcoin, I think, is one thing that really attracts a lot of institutional investors. And you have to understand that, Bitcoin is maybe the only globally traded asset that I know of whose demand is purely based on sentiment. There's not a Bitcoin company. There isn't Bitcoin price earning ratios. It's just a sentiment driven token. And what you can say about that, of course, is that sentiment has no limits. You can always be more optimistic. And so this rally may be the biggest we've seen. If we just look at where we stand today, pre-halvening for Bitcoin, and look at historical patterns, that would suggest, and I'm not predicting this, I'm just saying if you applied the historical patterns, it would suggest Bitcoin being in excess of $300,000 at the peak of this next bull market. And since all tokens are correlated to Bitcoin, that means that all the other tokens like Ethereum and Solana and some of these others will move up in lockstep. Those, however, usually move higher, directionally the same, but since they have a lower market cap, they tend to move up to a greater degree.
In related news, spot Bitcoin ETFs have extended their record-breaking streak this week. On Tuesday, senior Bloomberg ETF analyst Eric Balchunas shared an impressive update on the ETFs on X. He noted a significant milestone. The 10 Bitcoin ETFs collectively achieved $1 billion in trading volume, surpassing the previous record set just last Wednesday. Balchunas emphasized the inherent relationship between volatility and volume in ETFs, acknowledging that these numbers are exceptional for ETFs less than 2 months old. Notably, BlackRock's IBIT, Fidelity's FBTC, Bitwise's BitB, and ARK Invest's ARKB all experienced record-breaking trading days. According to the latest data from BlackRock's website as of March 5th, IBIT had accumulated 183,000 Bitcoin to its holdings, marking an all-time high single-day accumulation for the world's largest asset manager. What are your thoughts on Powell's and Williams' ultra-bullish outlook for the crypto bull market? Feel free to share your comments and observations below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.